Industrial average, you're looking at history there, folks, trading at an all-time high right now, along with the S&P 500, both new records. But the big question is, this strength, is it here to stay for the market? To market bear Steve Cortes and market bull Michael Robinson. All right, Steve, let me go to you first, my man. We're breaking out here. What don't you like, and what do you think is going to happen?
Right. And listen, Charles, it's great news, right? It's great news that we're at all-time highs and that we so quickly got back the Brexit losses. But there's a couple things that concern me here, and I'm not ready to pop champagne corks just yet. The first thing is, why did we rally back so quickly? I think the main reason is once again, central bank stimulus. Both the Bank of England and the Bank of Japan have promised that they are going to put the pedal to the metal as far as central bank stimulus. But I just don't trust that long-term, that it can really create underlying economic growth. It hasn't yet. It is able to get the stock market to all-time highs, yes, but it hasn't gotten Main Street moving the way we need to see the Main Street economy moving. The second thing that's related to that is that I don't like the leadership of this rally back. It's mostly been in safety plays, things like telecom, things that grandma would own, telecom, utilities, very safe dividend type plays. I think if we have an underlying growth story here, you'd want to see names like Google and tech, semiconductors leading the charge to new highs, and that has not happened in the last couple of weeks.
Although, Michael, you know, I kind of marvel at the idea that these utilities and these grandma stocks are leading the way. You can't argue there's irrational exuberance with the amount of money that's come out of this market, and yet it's hard to say there's a fundamental correlation right now.
Well, first of all, Charles, I want to say thank you to all the bears out there, because as a result of their overselling, and we've been seeing this, you and I've talked about this over the last couple of years, overselling leads to great buying opportunities. And my readers are making money hand over fist right now. So when I look at Brexit, I get excited. You know, we took gains on a stock yesterday, up 75% in 3 months, which was a tech stock. So right. If you find, it's a stock picker's market, and the fundamentals of the economy aren't. We're not getting 3.5% growth that we've seen. But remember, we have the dollar; it's strong. We have decent growth. We just upgraded twice the forecast for what we thought we had growth in the first quarter for the GOP. 1%. I'd like to see it be 2.5%. You're looking at a 9-year high in existing home sales. You're looking at 16.5 to 17 million vehicle unit sales rate. These are solid times.
Michael,
the last thing you want to do.
To a degree, it sounds like you're arguing that this could be a peak. In other words, you know, we were heading toward these highs. You would say jump on board for the market, but you're talking about highs that have been established. Isn't that typically when people start to take profits?
Yeah, you do see people take some profits, and so this is a stock picker's market. I'm a bull on a selective basis. You can't just blindly buy everything that comes along, and if you know how to pick stocks properly, you can make an enormous amount of money in this. And then, Charles, you know you have to use your portfolio management tools. You set your stops, you set your trailing stops, and sometimes you have to take profits along the way. But, you know, people have been betting against the stock market for years now, and they've been proven wrong over and over again. Are we going to get a correction at some point? Yes, we always get corrections. If you'd put $100,000 in the stock market in 1982 and did nothing with it, just let it sit there, it'd be over $2 million today. That's after the '87 crash, the dot-com meltdown, and then what happened in '07.
Although
you have to look at the long haul.
Right. I get you. I get that, and believe me, you're speaking to the choir. But here's the problem, though, Steve. You know, back in the day when Thurston Howell III was investing in the market, the holding period was 6 years. Now it's 3 months. You know, people don't hold through those kind of meltdowns, and I think that's one of the things you're worried about.
Yeah, no, and that is one of the points, is are you truly long-term? It's almost cliche to say you are, but are you truly, and can you handle the volatility? For instance, in January of this year, when global markets absolutely melted down, I think a lot of people who claim to be long-term actually bailed at what turned out to be some terrible levels to be bailing out. So as I said, look, the good news is we're at all-time highs. The bad news is we've been at roughly this price for the last year and a half, and we've been unable to sustain gains above S&P 2100. We'll see if we can sustain them this time, but I think the burden of proof here is actually on the bulls, because it's not been particularly bullish for the last year and a half, and there have been several very scary drawdowns, and I suspect we're due for another before the end of the year.
I think it's safe to say that we've got a selective bear and a selective bull, two very smart guys. We appreciate your expertise. All right, guys.
Thank you.